On Monday, we had the Trump bump. All the Trump stocks were trading higher. DJT, Funware, you name it, all getting a lift. Today, we got the Trump dump. Some stocks trading lower based on some comments. We've got some more earnings to discuss. We've got some warnings in the airline space. We're going to preview Netflix's earnings tomorrow night. Should be a fun Wednesday. We got Sean Emory joining us at 8:35. Always a great guest there. Let's go ahead and get pre-market prep rolling. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Alrighty, S&P 500 trading down. Wow, almost a full percent. I didn't know that was even possible in these markets. Let's go over to the Qs. Qs are getting hit a little bit harder, down 1.5%. Go over to the Dow DIA, which was strong as hell yesterday, closing up at new all-time highs. We talk a lot about that new all-time highs tend to bring more all-time highs, but not this morning, at least so far for the Dow. Also trading down about 0.2%, but holding in better there than the Qs and the SPY. And then how about the new darling of the market, the IWM? Could snap that 6-day winning streak here. For the IWM, we are trading down 0.5% there. We'll see. But I mean, wow, look at this chart. I mean, it's nice when these charts work out like this, where it's just so symmetrical, coming right back to this point right here at around $225. Might run into some resistance. We shall see. Let's go ahead and bring my man Dennis in. Dennis, how you doing this morning?
I'm here, and I brought Joel along with me too. We missed him, so I traditionally on his week off, I bring him in there. So there he is, Mr. Elconin. He's back, not in the flesh, but he's there in the picture form.
What is the thing with what happens when Joel is out?
The market always tanks when Joel leaves, and we missed this again. So I know it was a couple of days. The market's actually the Dow, so it wasn't really working because the Dow was going up.
Oh, wait,
the
hold
were
on.
not participating yesterday. Didn't really go up much at all. Now we get the Joel dump. So title of the show is the Trump dump, but maybe it should have been the Joel dump because the market always seems to eventually crater when Joel Elconin goes away. We miss all of his liquidity.
There you go. Yeah, no one's there to buy. I might have been. Was I getting some bad prints there? Is like
the 8 o'clock prints.
Man, I'm sorry. I'm sorry.
8 o'clock Robinhood dump. Everything's just dumping on. So you're looking at the Robinhood trades from last night. So all these trades you see where the IWM is green, it is not green, folks. And the S&P didn't just all the way come all the way back. We didn't have a miraculous rally at 8 o'clock. This is the Robinhood tape dump that we get at 8 o'clock. Lots of trades went off last night. All of these trades are from last night, not from this morning. Obviously, we've had some more issues this morning. ASML is a big driver of the downside for chips here this morning, but it started last night. So last night, the chips started rolling over with Taiwan Semiconductor leading the way. And the reasoning for that was a Bloomberg interview with Donald Trump. And it was interesting, to say the least.
Yeah, let's go ahead and go through some of those comments. So, of course, at this point, you know, the odds-on favorite to win the 2024 election, former President Donald Trump, in an interview with Bloomberg Businessweek, like you said, basically pushed back on the idea that the U.S. should just kind of like at all costs defend Taiwan.
Yeah.
He said Taiwan should pay us for defense. He said, you know, we're different than an insurance company. Taiwan doesn't give us anything. Which, I mean, with the semiconductors and everything, I don't know how true that is, that Taiwan doesn't give us anything, because, hey, if we could build all those chips at home, we'd be doing it, which is what we're trying to do right now, but we can't as of now. And then he said Taiwan did take 100% of our chip business. I don't know how much of it is Taiwan taking it versus U.S. companies outsourcing the manufacturing to other countries because it's cheaper. And so, you know, I mean, it's been talked about a lot the past few years, Dennis, that, you know, once COVID hit and people realized how much semiconductors, how important they were to the
Yeah.
economy. And, that's like, oh, maybe it's not a good thing that we're reliant on other countries. We should start building some of these at home. So Trump does have a good point there that like maybe we should be doing some of
Yeah.
this stuff at home. But to say that Taiwan, which clearly does not have the capabilities to defend itself against any invasion from China or any other adversaries, I mean, that's kind of been the U.S. deal with Taiwan, is that we're going to be the guards and help. And even if we don't have to do anything, just kind of saying that, like, that's my thing, is like Trump, Biden, whoever's in office, you don't even have to like send military over there or whatever. If you just say, yeah, if China does anything, they're done, that probably prohibits anything from happening right there. But by
It
saying,
opened a can of worms, is what
yeah,
that commentary does. It makes you think that the next administration, if Trump indeed does get in, that they might be like, well, we're kind of lukewarm towards it. If you're lukewarm towards it, does it give Xi a window to say, hey, if I was ever going to do this, I better do it under this administration here, because in 4 years, and we're not saying Trump is in, we're saying in the hypothetical situation that Trump wins the election and comes in January. There's like a 4-year window maybe where the U.S. isn't going to be fully defending Taiwan. So again, we're not saying they're not going to. He didn't say they weren't going to. He just sounded lukewarm towards doing it. It wasn't. And on those comments, if you look from Taiwan Semiconductor last night, so bring up last night's chart, because everybody's going to say, well, this is ASML knocking down Taiwan Semiconductor. ASML was up last night ahead of its report. Taiwan Semiconductor was down 5 points ahead of this last night. So if you look from last night's trade, not this morning's trade, Taiwan Semiconductor has continued going down because of ASML. So it's two drivers. One, it was down 5 points on the Trump commentary last night. You also saw chips starting to dump last night as well, a little bit. And then the ASML news comes in, and now it's like, holy crap. Trump saying may not defend. ASML, they're hitting that down 8% on their earnings. Let's just sell chips across the board. And that's what we've turned into here this morning. It's a chip wreck.
yeah. And again, it kind of reminds me of when, when you have like Fed officials that kind of jawbone, and if they can, without even changing policy, sometimes with their tone or what they say, can influence the markets and, inflation expectations and all this. And again, like just by saying this, Trump now could potentially, obviously you're clearly seeing the price action in Taiwan Semiconductor. But like, the whole China invading Taiwan, that we haven't talked about that much because it's kind of been on the back burner. Does this bring those geopolitical fears back for some of these
It
companies?
does.
And not only for the Taiwanese companies, but you look at some of the Chinese companies. I mean, clearly, if something does happen between Taiwan and China, that will not be good for the publicly traded Chinese companies. Baba not really trading down that much this morning, down 9 cents. You go to JD. What's the check KWeb? So either way, I mean,
there's so many repercussions here, so I don't want to move on from this here yet,
okay,
because there's a lot more repercussions here. We've got Intel trading up here this morning, so you'd expect if it's going to be a chip wreck, Intel's going to get hit as well. But no, Trump commentary here is propping up Intel because, one, if they're not going to defend Taiwan, and clearly in that interview, he's talking more about, Taiwan 9,500 miles away. We know who's not 9,500 miles away is Intel. So everybody last night on that Trump commentary was buying Intel. Trade up over 2% last night on the Trump bump for Intel. Also trading up last night was Global Foundries, GFS. It has leaked back and is just flat here right now. But, the question I would pose is Intel now a Trump stock? Because if the administration gets in, maybe they're going to throw more funding at Intel to try to get these chips domestic. It's maybe not a bad idea. It's maybe not a bad idea to build. So Intel's been sitting here, dog of my portfolio, dog of Mr. Elconin's portfolio. But we were talking about this stock yesterday saying the chart's starting to look somewhat productive here. Now, I mean, we're on a really disastrous day here. We're going to get to the overall market in a second, but we're telling you the reasons why the market is down here right now. The question is, is a stock like Intel actually see some love today? If the market starts to base, I think Intel's a stock that maybe people start thinking about here again. Now the foundry business is in very early innings here. This isn't like all of a sudden we can just start producing and match Taiwan Semiconductor here. But with the Trump commentary, it's not going to hurt a stock like Intel.
Yeah, and that might be if Trump does end up getting elected, that could be an interesting, political move to I guess kind of take credit for bringing chip production back to the US after, of course, the current administration passed the CHIP Act, which is giving billions of dollars to Intel and other US chip manufacturers. So you could say it's a Trump stock. You could probably also make an argument that Intel's a Biden stock because of all the again money
the CHIP
that
Act.
the CHIP Act that Intel and other US semiconductor companies are set to receive. I mean, they're building the new plants right now, but the problem is when the government passes this CHIPS Act in 2022 that allows for billions of dollars to flow to these companies, it doesn't happen overnight. It takes a while to bring these supply chains and to bring that production back on shore. And again, like the part of it is the geopolitical bringing down that geopolitical risk, saying, hey, we're going to be better off next time there is something going on in the world, whether it be a pandemic, whether it be a world war, whatever it is, if we can produce our own chips at home instead of being reliant on another country. Not to mention the fact that it adds, high paying manufacturing jobs to the economy, which is, a net positive for the economy as well. So at least it sounds like Biden and Trump are on board, are on the same page with one thing, and that's the fact that we should be producing chips.
There may be one stock that's got both administrations backing. Obviously we can see Tesla. We've talked about him siding with Trump, but in the case of Biden, Intel wins. In the case of Trump, Intel wins now.
We should just go all Intel, Dennis.
I don't know if I'm doing that. Intel's still a dog, so I'm not sure I'm doing all Intel and all in.
Here's the problem.
Piece in there.
Here's the problem with my luck is if I go in 100% Intel, knowing that, okay, Trump wins, good, Biden wins, good for Intel, someone like RFK is going to win or something, and my portfolio is going to dump.
Somebody off the grid comes in here.
All right, well, while we're talking about chips, let's go to ASML.
Yeah, and this is the other driver and probably the main driver here this morning, because one thing is when the technicals line up with the headlines, that is not good news. And I tweeted yesterday about NVIDIA teetering on a 4-day low. It took that low out yesterday. I actually tweeted NVIDIA breakdown, small breakdown, but you could see on the charts that it's like, I don't like it when it takes out that 3-day low and then takes out the 4-day low. And then it was really, it teetered there most of the day, to be honest. But now you get the headline over. Now you get the ASML news, which we're going to talk about here in a second. And you have an NVIDIA sell-off here. And now you're talking about the lows again. I'm going to give you lots of commentary on the chips here in NVIDIA. Let's go to the specific catalyst here for today, which is ASML. Give us those earnings, AB.
ASML reported EPS of, I don't even know what currency this is, but we'll just go with the numbers. 401, which beat the $3.71 estimate. Sales came in at $6.24 billion, beat the $6.03 billion estimate. So you had a double beat there on EPS and sales. And then they reaffirmed the 2024 outlook. The problem with just reaffirming the outlook is that with the chip stocks, the expectation has been that they're going to be increasing their guidance and all this stuff. They actually reported kind of some softer guidance than expected. Actually, they did declare a €1 and 52-cent interim dividend there. So, again, like I think the bar is just set really high here for chip stocks because of what NVIDIA has been able to do, what some of these other SMCI, the growth there. So to just say that the outlook is unchanged, even though, again, they got that double beat, the market wasn't too thrilled about that. Stock trading down about 7% this morning.
Yeah, so obviously this is, another chip stock here that has been teetering on support as well. And if we look, the technicals really, obviously when you have an earnings report, technicals don't matter as much. But when you look, we had 5 lows in the same area. Joel was here, he'd be looking at this 1060 area where we just obviously crashed down through and burned. Now forget about 1050, forget about 1,000. Now you're below 1,000 here. Can you reclaim 1,000? People asking me, not only here in the chat, but also on Twitter, are you buying today's dip? I mean, people are so excited to come in. I'm going to say something right now, which is going to scare the hell out of everyone, but I think there's a good possibility that we may have seen NVIDIA's high for the year. I think NVIDIA is going to be higher 5 years from now. I think NVIDIA is going to be higher 3 years from now. I think this trade is so bloody crowded that I don't even think you've really seen much of a sell-off here yet. I think Nvidia could head to $100. I think it's just really crowded. I think people and that's why I'm not coming in. And maybe I'm wrong. I still have a piece of Nvidia. I'm completely talking against my book here because I have some Nvidia in my long-term portfolio, although I've lightened up 3 or 4 times. It's just so much crowdedness. And the whole in the last 2 weeks, mindset has changed so much that they're looking at value. And here you have half the bloody market, maybe more, trading 12, 13 times earnings. And you got all these tech stocks trading 35, 40 times earnings. I tweeted out a week ago, is it time, for, this big, great rotation from, these tech leaders into the value laggards? It was so wicked in the last week that I think that's got staying power. Now, I actually think on pullbacks here, I'm buying more value stocks right now. Not talking the long-term portfolio, talking the trading right now, because I'm leaning towards, after today, Trump commentary, I think there's a possibility that we've seen the high for the year. Now, again, I'm not selling out the Nvidia in my long-term portfolio. I just think, would it be unreasonable to say Nvidia could go ahead and have a 6-month cooling period here? We don't even necessarily have to go down to 110, 100. What if we just chop around, trade sideways? But I think it's going to be a real struggle for it to get back to 140 anytime soon. And the other reason is I was doing a podcast. I just did, one of those Twitter spaces there, and talking with a lot of other traders over on that Twitter space. Everybody was like really questioning, because I said I'm diversified, and I'm like, I love the Nvidia story, I love the AMD story, but I've just learned the hard way because I've been through so many things that I stay diversified, because when times get rough, you can really get crushed. And people are like, that's just the worst way, man. You've got to be in all these tech stocks. Why do you got any of this other stuff in your portfolio? And there was a couple people that were like getting the diversification. But if you've started trading in the last 2 to 3 years, you've been spoiled with tech. And you're like, why would I buy, anything else? Because it's this tech that goes up. And, I've been saying it this year, when we started talking in June, everything sucked. IWM was up nothing on the year. Tech's up 25% on the year. I mean, if you didn't have tech, you were massively underperforming. Everything changed with that CPI print. Everything changed when we started talking about cutting rates. Goldman talking about it this month. That ain't happening. But everything kind of changed there. So the mindset so right now, if we just analyze the landscape, you've got a majority of retail traders very crowded in the tech trade. And they're like, well, let's buy the dip. It's going to go right back up. I think you've got to uncrowd that trade. I think you have to really uncrowd that trade. And then it's going to eventually stabilize, and eventually probably a couple of years, we're going to be going higher here again. But I think you could have a cooling period for the next 6 months where the Qs aren't making new highs, potentially leaking. Microsoft, it's 36 times earnings. Has Microsoft ever traded 36 times earnings? Apple 35 times earnings, and they're justifying this? Has Apple ever traded 35 times earnings ever? I don't know if it has. When I started buying Apple back in, and we've given this argument before, and I've been wrong. I was there giving this argument was 30 times earnings, and I was like, it's kind of overvalued for Apple. 34, 35 times earnings here now. You're paying a lot for Apple right now. I think there's a cooling period going to happen, and I think that the CPI number from a week ago just lit the fire to cool this trade off. So Apple sitting here at the highs, it's down $5 here today. But I'm not coming in here and buying this $5 dip on Apple right now, because I think there could be more of a cooling period than the market expects.
Yeah, and I mean, Nvidia, I mean, the thing is with the higher valuation, there's the expectation that earnings continue to grow, which Nvidia does have a track record over the past few earnings reports of just blowing it out of the water. Someone in the chat asked, when does Nvidia report? Nvidia always reports late. That comes in August, so we do have a few, at least another 6 weeks or so until Nvidia reports. Dave Lauer on Monday was talking about this, and that Nvidia's chart, was kind of looking a little bubblicious, and the fact that, he thinks that the AI stuff might be a little overhyped. To that point, I'm going to pull something up, and I'm not going to say like this is this one little thing is an indictment on the whole AI, capabilities or whatever. I just thought this was kind of funny. I took a screenshot. I got to pull it up real quick.
Sure.
The other day, so when the IWM, like for the third day in a row, started heating up, I was like, well, we always talk about how the IWM has all these companies in it that aren't that profitable. I was like, why don't we just sort the 2,000 companies in the Russell 2000, buy the companies that are actually profitable, and then I'll start buying some of the profitable ones. And I was trying to use
That's not a bad idea.
Yeah, I was trying to use ChatGPT to help me out. And look at this. I was like, okay, as of your latest data, can you please give me a list of companies in the IWM Russell 2000 that are actually profitable? It goes company A, ticker A, profitable. Company C, ticker C, profitable. Here's the list of companies in the Russell 2000 that are actually profitable based on the hypothetical data set.
This is from ChatGPT?
Yeah, I was like, this is what people think are going to take everyone's jobs? Like, what are you talking?
It's
Like,
so, yeah.
I'm like,
And did you see the other tweet? Look at the tweet that I tweeted. I will make fun of, ChatGPT just a little bit here. It's why we're in the early innings, folks.
Well, it's the early
innings,
innings, and that's the thing. Is again,
but,
I'm not saying this is an indictment on the entire.
This one's hilarious. Go to my Twitter account. You have to scroll down a couple of tweets, but you'll see the retweet of the salmon. Just show me a picture of salmon in a river. Show the picture of the salmon in a river. I'm not sure if this is fake, but I laughed out loud. I almost spit out my lunch when I was looking at this picture. And show this. The picture, he's scrolling down. You'll see probably the picture that I tweeted, retweeted. Yeah, show a picture of salmon in a river. Click that. Click that. Show that on the big screen.
It's that okay, but that is salmon in a river. You didn't say live fish swimming. You know, I mean, like that looks like pretty good salmon.
Show me a picture of salmon in a river.
That looks like a piece of salmon I would want to throw on the grill. I mean, if that's how you found
that is awesome. I think it's real. Like it actually made that picture. Well, so you can see we've got a ways to go with AI before it's taking everybody's job. That's for sure. Now, we're not saying salary AI stocks and AI is a bubble. We're just saying we've got bubblicious in the short term with AI. I mean, let's give NVIDIA, so I'm officially paper trading all of my NVIDIA gone. I have a little small piece left, like I said, but if I was in NVIDIA here, I may even be selling it in the hole today. I've already sold because I told you I sold more last week at 134. I told you that on that pop-up. Failed to make the new high, and I was nervous about it not potentially making a new high. It was more of a technical thing. But give it perspective here. NVIDIA, a year and a half ago, was $20. It's $120. It's a 400%. We participated in 220% of that move. When I came out on January 7th with NASA and had NVIDIA, AMD, SMCI, and Amgen, all those stocks obviously went up substantially. They're SMCI the most. But I mean, we're at a point here now where if you were in these for trades, you did pretty good. It's time to ring the register. SMCI as well. I tried to play it again from the long side, and I got back out. So I'm out of, I think I'm all out of SMCI too. I think I sold it all. So I'm out. I've got a small piece of it left.
I'll take the blame on that one. I know you got into that one because of me.
Yeah. So, but still, that was funny. I just think we're at a point, if you're sitting with your trading account, not your long-term investing account, you got some of these in your long-term account, you'll probably be fine. But if you're sitting with your trading account, you're just loaded up calls on all these AI stocks, and you're just loaded up. A lot of other people are loaded up too. And I think there's going to be a cooling period that the market's not going to like. And I think that started this morning. It probably started 2 weeks ago when we started moving everything around, obviously. But, Apple's making new highs yesterday. So even if you're selling, these tech stocks, you're not selling far from the all-time highs, even if you're selling the whole today. So the answer to the original question is, am I buying today's dip in tech? No. The answer is no.
Sorry, I was on mute. Yeah, and I mean, like, I think that's the one thing I agree, actually. And I mean, the chart doesn't look great for NVIDIA up here, that we could see a drawdown. The good news is
so overextended. It's not even that it doesn't look great. It's a great looking chart. Apple's a great looking chart. Microsoft's a great looking chart. If you subscribe, to the momentum strategies here, these are the stocks you want to buy on dips. I just think technicals are one tool in your toolbox, and you got to paint the rest of the landscape. Overextended. You got Trump commentary, which is going to be on the news today. I mean, it's being talked about last night. It was, said after like 6 o'clock last night, that interview came out. It's going to spook some people. Taiwan Semiconductor's down $10. It's going to spook some people. And maybe they just come back in and maybe they just buy. Maybe this IWM, maybe this isn't something. This was just a blip and this is the great, opportunity to sell all your value stocks and buy all your 35 and 40 times PE tech stocks. Or maybe this is the start of, a little bit more of something, a cooling period, not, saying tech's going to crash, not Harry Denting, Peter Schiffing here. I'm just saying stock, NVIDIA up 400%. In 1.5 years, it's time to cool off a bit. Let's cool off, and we'll reload. When we start seeing, that it's a little bit safer play. Right now, just so overextended.
Yeah, that's what I was going to say. If you are super bullish NVIDIA, and again, I'm talking long-term investment, not swing trade, not anything. If it does draw down, it presents a buying opportunity. And we saw that back in 2022 when NVIDIA went from, this is split adjusted, obviously, from $35 a share down to $10 a share. And we were at a point in 2023, less than a year and a half ago, where NVIDIA was at $13.50 a share. So, I'm not saying it's going all the way back down there, but if this does end up drawing down 20, 30%, whatever it is, I might add some more to my long-term portfolio.
If it draws down 20, 30%, it's a whole new ball game. We start talking about valuation coming back into reasonableness. The bottom line is the valuation just simply, has got a little bit overextended. And that's why we're not saying, the trade's over forever and ever and ever. But I just think I think there's so many people who want to be in this trade too. So I'm warning those people, the people who have wanted to be in this trade for the last 2 years and just watching goes up, up, up. They're like, well, this is my chance. We got a 5% pullback. I better get in now. I'm not committing new money to this tech trade up here. It needs to cool off substantially. The stocks, and we're going to bring Sean Emory on here soon, and Sean is fantastic. Sean gives us, obviously some other, stocks too. So he's going to come on in a few minutes here, and we can get his commentary as well. But I think it's time for tech to cool a bit. That's all.
All right, let's before we bring Sean on, let's run through a couple other earnings reports we had this morning. You did have Johnson & Johnson, old J&J, trading slightly higher, up about 90 cents. Let's go ahead and get that report there. EPS came in. Oh, this is so nice that it's in dollars, Dennis. I can understand this. I didn't even know what we were looking at with ASML. Johnson & Johnson, $2.82 EPS, beat the $2.70 estimate. Sales came in at $22.4 billion, beat the $22.3 billion estimate. Declares an $1.24 dividend there. Guidance of $9.97 to $10.07 compared to prior guidance of $10.57. So they actually lowered guidance a little bit there. The stock, again, pretty flat. I don't know really what else we were expecting from Johnson & Johnson. It ain't no NVIDIA that's going to be moving 20% off its earnings, but pretty flat here this morning. Decent report for Johnson & Johnson, maybe not the best.
Well, and maybe not the best, but here's this value stock that's been held down for a long time. I'm not putting my long-term portfolio. You know why? I've talked about this on the show a bazillion times here. We don't know how, this issue with talc's going to work out. But, if they could solve that issue, that, would. But we know that's what's held the stock down for a long time. But should we start looking at a little bit more defensive names? Should we start looking at some of these beaten up value names? Because some of them are starting to show a little bit of life. Johnson & Johnson, if they didn't have the talc issue, I'd say I'd buy it right now. If they didn't have the talc issue, I would buy Johnson & Johnson. But they still do. That issue is going to go on probably still for years. I know they think they're going to solve it. They're going to do, a spin-off of another company and figuring it all out. But it's hard to come in J&J here with that underlying lawsuit still not being fully resolved. So that's the only reason I would not buy Johnson & Johnson. Valuation's reasonable. J&J trading at 14 times forward earnings, 15 times forward earnings. Again, it's 22 current. I don't know if that number's right. 14, 15. I thought it was more like 19. But maybe there's some projections to go up here. Johnson & Johnson's not an expensive stock, but they has that underlying issue that scares the hell out of me. I've saw what's happened to 3M over the course of the last 5 years with earmuffs, or earplugs, and it's obviously been weighted and came down to a valuation that I didn't think it would ever see. 3M's trading, now 14 times earnings as well. So, but to pose the question, take it away from Johnson & Johnson to the chat. Should we start looking at some beaten down healthcare names? If we're having a great rotation from leaders to laggards and laggards to leaders, There is so many stocks to pick and choose from. Who do you want to go to? Who's your poison here? Bristol Myers is sitting here at like a 10-year low. Pfizer's, on multi-year lows. It's coming up a little bit lately, but there's so many stocks here that really, valuation-wise are actually very attractive. They just never had any love. Maybe this is the time. Maybe this is the time to start thinking about some other stocks.
Man, look at this Bristol Myers chart. It went from
It's a disaster.
$81 January 2023, now down to 41, cut in half here.
It's the anti-NVIDIA trade. Why are we buying Bristol Myers for a 5% dividend when we got NVIDIA going up 5% a day? I mean, it's that trade. But if rates start going lower and NVIDIA actually starts going down, and Bristol Myers has its own problems, folks. I mean, they've screwed up so many things there, mismanagement, whatever it is. Maybe it's not the one. But it's also been one of the biggest pharmaceutical companies for a long time, making 7-8-year lows. Maybe it starts to show some life. I mean, you could stop yourself out if you wanted to try for a trade and say, yeah, this is the great opportunity to maybe jump in, one of the core names. I mean, it's $1.50 off of its 10-year low here, which was made 6 days ago. So I think you stop yourself out under 39.35 and say, maybe we got a laggard trade here that could perk itself up too. We've seen what's happened with the laggards in the last week. I'm combing the ditches for laggards who haven't went yet. This is one of them. So again, what you've got to do if you're putting these on for trades, because a lot of these stocks have been dogs for a long time, and you're buying a stock in a downtrend, Brian Shannon would slap me on the hands for doing that. But I mean, we've stopped going down here for Bristol Myers for the last 2 months. Could we start going up? We saw Intel base for 2 months. Then it started going up here again. We saw Pfizer been basing for a couple months, starting to go higher here again. Bristol Myers basing for 2 months here, not going down. Maybe they get exhausted from selling it. So as much as they have buyer exhaustion in a stock like NVIDIA, maybe you get seller exhaustion on a stock like Bristol Myers.
Yeah, and again, in that same camp, you do have Pfizer as well, which has been a dog trading lower. I was just going through some of these big pharma companies. I didn't even realize this till right now, but Lilly trading lower 3.5% this morning on weight loss data from competitor Roche. I wonder how much Roche's stock is up. Oh wow, Roche is up 7.5%. Dennis, we missed this. That's on us. But now we didn't miss it because we found it. But Roche is up 7.5% on some weight loss data.
Seems like every time Lilly pulls back, it's just a buying opportunity. But at a certain point in time, you got to ask yourself, is Lilly going to have, a cooling period as well? $300. It's up 200%. It's one of the biggest pharmaceutical companies in the world, up 200%. Rightfully so. I mean, they're the leaders in weight loss and everybody's taking the drug. But is at a certain point in time a cooling period warranted for a stock like Lilly as well? I think so. I don't think I'm chasing some of these stocks up here. And maybe they turn around and they get back and they start making new highs. Well, then, it starts. But Lilly's trading 68 times earnings.
I know. And a 23 price to sales, 23.5. I mean, you talk about NVIDIA's valuation, Eli Lilly and NVIDIA. We've talked about their preponderance to kind of trade together. And now you're seeing them both weak this morning. And again, this is, I think, the biggest problem is you have the weight loss drugs. Oh my God, amazing for Lilly. Well, what's going to happen? Other companies see the demand and they start putting out their own drugs. And Roche's, again, which Roche is trading up 7% this morning, is an oral treatment. So if that gets to the market and it's got good efficacy, what would you rather do, Dennis? Take a little pill or shoot yourself up with the injections from Eli Lilly? And so, certainly like the increased competition, let alone the valuation.
The pills are a game changer. The pills, definitely, if you could get the same thing and same effects in a pill, it's going to impact, like the people who are taking shots, because I'd much rather take a pill. And I think there's competition coming for them here too. So no, I'm not buying the dip on Lilly at 68 times here earnings either. Everybody's got the same damn portfolio out there. I didn't realize how crowded these trades were until I was doing, the other podcast. There's lots of people and they were really attacking me for having a diversified portfolio. People were basically saying I'm just doing it all wrong. A lot of those people started trading the last 2 years though. The last week, they're like this. Bob Pisani said it maybe the best. He said, this is the revenge of diversification this last week. And I'm like, it totally is. I like, that's totally what it is. Diversification. My portfolio was up 0.6% yesterday on a day that my NVIDIA was down, my AMD was down, my Dell was down. and today everything's going to be down because everything is down. But I tell you, diversification when the market starts cooling off is the way your portfolio stays up. It's the way you don't lose serious money. So I'm glad in the last week that I was diversified. I haven't been glad all year, and I probably would have made more money if I was all in NVIDIA and all in AMD at the beginning of the year in January. My account would be way more. But stocks don't always go straight up, and sector rotation happens, and we're seeing a lot of that right now. So if you are going to be all in on certain sectors, have yourself some stop losses, because when those sectors cool off, you can lose a lot of money in a hurry.
Viking also trading lower on that Roche news, but it is 8:35. That means it's guest time, guys. And we've got Sean Emory today hanging out backstage. Let's go ahead and give Sean our very special pre-market prep welcome and catch up with him when we get back. All right, Sean Emory, founder and CIO of Avery Co. How you doing, Sean?
What's going on, guys? Good morning. Bright and early.
Yeah, Sean.
So what are your thoughts here? I mean, I've been talking about, diversification here a little bit, and that's doing a little bit better. I know, like, we've seen so many, crowded tech trades here. What are your thoughts? I mean, you follow all these companies here. Is this NVIDIA's going to 2000? Are we just going to continue to go straight up here? Or is it time for some of the laggards to show a little bit of life here? What are your thoughts here? We'll set the overall landscape, then you can give some stock picks too.
Yeah, look, I think the last 2 years have been, much of the same, which is a lot of concentration in things that, are kind of like counter-cyclical or, facing some sort of structural, not facing, but, buoyed by some sort of structural trend. I think AI obviously is just that. People are trying to get out of the way of things like, high debt ratios with rates where they're at, what's your views of, the economy and the jobs market, and the NVIDIA/AI trade kind of cuts through all that noise. So I think that's why a lot of capital has flowed to kind of these cyclical/structural winners. That has obviously buoyed or propped up a lot of the valuations within a lot of these indices. The average, Mag 7 valuations like 60 times. And a lot of that, we could all, assign AI as the catalyst there over the last year. Now, that headwind over the last 2 years, I think, is changing, right? We just heard Powell last week. We heard him again this week. We know that many of the inflation reports here recently have, confirmed that inflation is pretty much out of the way at the headline level, and even the core, both for PPE and CPI. And, we're starting to get some clarity on elections in terms of betting polls, at least for now. So a lot of the noise, a lot of the uncertainty around inflation rates and call it elections is subsiding somewhat. And I think that is what you guys were just referring to, which is, get back into everything else. And it's been harsh, rapid, and here in the last week and a half, you've seen kind of that rubber band snap back, and we've been calling for that. But I mean, it's not like that's unique to us. It's just valuations, technicals, performance gap, all of that was leading to kind of what we saw. The question was, when is that rubber band going to snap back? And that, again, that's the thing that people can get caught up in for a long time before it actually does. But we're constructive on the everything else trade, and NVIDIA is expensive. Yes, AI is, important, but it is expensive. And we think they're over earning, but that's a whole nother conversation.
So, okay, let's just say hypothetically we get this cooling period that I've been calling for the last 30 minutes here. Let's just say this sell-off we get today is more than just a blip and not a buying opportunity here. Where do we go? Because I don't think this market's rolling over. Interest rates going down. I mean, this is going to be a good environment for investing in stocks. And some people are confusing, some people are saying Dennis calling for a recession today. No, I'm calling for rotation potentially out of overvalued Magnificent Seven, to your point. And when you put them all together, 40, 50, 60 times earnings, even Apple at 34 times earnings, there's a lot of stocks that are pretty darn cheap out here, Sean. I know you can find those stocks. You're good at finding these stocks too. Where would you put new capital here today?
Yeah. Obviously at a higher level, that software area is really interesting. In 2018, that was the area that was really, really expensive. Again, in 2021, that area was really, really expensive. Everyone was on that cloud software trade. But over the last year, you've seen quite the opposite, where people have, outside of the big ones, the Microsofts, the Intuits and things like that. Beneath that, again, is really cheap, and there's a lot of flush cash. They've raised a lot of capital over the last several years. So they're cash relative to balance sheets. People are scared of, what AI is going to do to the seat count, the user model, and it's going to be more of a consumption model. We speak to plenty CIOs, CTOs, CFOs. Having a consumption model as a CFO is, hard to manage and forecast. So I think that theme is a little bit stretched as well. Going to some names, again, I look at a company, and it may sound like somewhat of a broken record. Zoom, 40% of their balance sheet is cash. They're trading sub 10 times. We think growth is reaccelerating. The phone business is now 14% of their business. People aren't talking about that. We spoke to a partner that sells Ring Central, Microsoft, and Zoom yesterday, and their kind of commentary was, Zoom's the best product in telephony, UCaaS. Microsoft is entrenched, but Zoom's winning a lot of deals, and everything outside of those top three is getting pushed out. So that's one. Fiverr's an interesting one that's kind of had the AI negativity, the small cap negativity, the Israel, negativity since they're based there. So you've kind of had these three negatives that I think is also very similar characteristics. 35% of the balance sheet is cash. They're growing, margins that are at record high, profits at record high. And that's one that we think is structurally in a strong place. So finding these cheap ones, flush with cash, structural winners that are, online, digital e-commerce or software related, we think there's a lot of opportunities in those spaces.
There's going to be continued opportunity, obviously, on some of these beaten down names. I don't know if Zoom's the one for me, but I know, like, you start looking and you're like 10 times, 12 times. There's so many stocks, even tech stocks, trading 10, 12, 14, 15 times earnings. I mean, if this starts to become a CFA value market, there's not just two stocks. There's probably 2,000 stocks that we could look at here. Now, obviously, you focus more on tech stocks and stuff too, Sean. But, do you think you start looking at other sectors here as well?
Yeah, I mean, there's clearly other sectors that are interesting. The question is really around structural, cyclical tailwinds, right? You look at like some of the energy space, and that's kind of been abused over the last decade. And people have really just tried to see, what is going to get those things to move. And yes, you have some moments in time where the energy space has moved, but generally speaking, we know we can produce, and that's a net negative. We also know that there's kind of like this transition occurring within energy, so that's a net negative. So you kind of have these structural headwinds, which I think has kept valuations capped, like the multiple people are willing to pay. So it really comes down to market share growth. Anyways, outside of that, there's valuation in I would say the financials and also energy that seem interesting from somebody that is disciplined in terms of looking for things that are trading cheap optically. The question again is, I go back to the Zoom story because people are writing about it, but the 10 times earnings for something that is a structural kind of tailwinds behind it versus something that is also trading at 10 times, which could be like a Halliburton or something that's facing some of these structural headwinds. Those are the two things where, the bias shifts towards the more structural tailwind. So that's kind of how we think about it. Utilities are interesting, in general. Obviously, some of that is tied to the AI stuff, but, separating from that, you just have the fact that, you have these higher dividends that are attached to many of these companies. And if rates are actually going to come down, obviously multiples do get affected by that. So interesting areas outside of tech in general. I just think it happens to be that so much capital is aggregated in big tech that smaller tech, mid tech has actually been more attractive than honestly, like I've seen it over the last, 5-7 years.
Yeah, because when we think like and compare to bubbles, and some people, want to compare us to like the 2000 tech bubble, this is nothing like that, really. You have pockets of bubbles, but you have pockets of just underperformance, like massive underperformance, even to your point, even within the tech sector, like with a Fiverr or a Zoom. I mean, at a certain point in time, catch-up trades do happen. And it's been all about momentum. This market's continued to be about momentum here. But in the last 10 days, it's been about the catch-up trade, and I think there's more catching up to do.
Yeah. No, I agree.
So
Small. Yeah, go for it.
I was just gonna ask. I mean, I know you're kind of I follow you on Twitter. You're kind of looking for this like sweet spot of smaller companies, but a lot that are still bigger than maybe $1 billion market cap. How do you find these companies? I mean, like, ones that are maybe, 2, 3, 4, $5 billion market caps that are, as you put it, dominant in their fields.
Yeah, I mean, obviously, without going into our full process, but it's we have specific areas we're looking for. We have 12 designated areas, everything from automation. Automation has 12 different branches to it. That could be physical automation inside of warehousing, all the way to RPA inside of our tools and that we're using day to day. Obviously, AI and stuff fit perfectly in that mix, but so we're sitting here, we're trying to say, okay, like, where's the world actually going? Not necessarily where it's been, but again, not trying to go too far out. We're not trying to say, hey, flying planes everywhere, or flying, cars. But we're basically saying, where's, with some level of confidence, where's the world going? Designate that map of where we think it's going, everything from energy to, automation and how we work and play and eat and stuff like that. And then we start to, essentially shuffle through many of the companies. When companies enter the room in terms of IPOs, we make sure we watch them so we have some sort of understanding of who they are, what they do. Otherwise, over time, you're looking at so many companies. You're going to conferences. The Canaccord conference is coming up here shortly. There'll be thousands of companies presenting. So that's the stuff you build up over time, and then we have obviously a dashboard that we're able to basically pin all our companies that we've tracked or watched or anything like that to those designated areas, and then take them through a process. So that's kind of how we're doing it. And then we're looking for these leaders, like you said, that have structural catalysts to them. Maybe they're going through a transformation. We love those where, we've talked in the past around Nutanix, which was, not really a name that most people know what they do or even care. And it was going through a transformation and heading to where the world was going, into more of a kind of multi-cloud or hybrid cloud, they would call it. And that those are unique because they have a structural catalyst to them. They're going through a transformation, so the financials tend to be a little bit muddled. And therefore, once they come out of it, if they are successful in that transition, you get multiple expansion plus obviously reacceleration of the growth, which is ultimately what you want as someone trying to make investments that will pay off over time.
So you're looking for these kind of like long-term trends, trying to find these companies that will grow into those trends that are in the right areas. And then what is your like holding period? Are you trying to find these, say a $3 billion company, buy it now and hope it grows to an $100 billion company? Or are you looking for more like 6-month, 12-month swing trades? I mean, what have you done throughout your career so far?
Yeah, I mean, look, like any investment we make, it's with a long-term bias for sure.
Okay.
And I'm talking multiple years. You're trying to, underwrite this thing to as far as you can possibly see. So usually around like 5 years. And, with that, obviously there are some changes while that's happening. Recently, we've have stuff in our portfolio that has been more tied to the AI stuff and therefore has done well, and therefore, takes big slogs in our portfolio. And we essentially, we had to cut those down, not because they weren't doing well or, structurally well positioned, but, you take those out, and at those moments in time, you're thinking like a trader, what is momentum looking like? What is, relative momentum looking like, things like that. And then that's when you make those trades. But those are for the sake of, the long-term perspective of the portfolio. Where again, in our portfolio, similar to an index where, anything that is larger, more AI, concentrated in our portfolios has significantly outperformed everything else in our portfolio. So at some point, even in our portfolios, we're making the same transition that I think the market's making right now. And that's it. I mean, that's ultimately what we're trying to do. And then staying really attentive to what they're doing in the short term, right? So like, who are they hiring? What are they hiring for? What are they telling us? Some of the data that we track, like foot traffic and credit card data and stuff like that, that informs us that we're directionally, still on the same path. So that's how we, in the very near term, short term, every day what we're doing, and then long term trying to, hold to that thesis until it's, either reached or hopefully not broken. But if it is broken, hopefully we're seeing it in real time and then, positioning away.
Yeah, I saw on your Twitter that Instructure INST is one that you bought. I'm into that one as well. They run Canvas for universities, and Tomo Bravo is in that stock, and that's a one that, like, kind of in that theme that you're talking about, that over time, more and more universities, schools, whatever, are going online with this stuff, and it should be a company that benefits from those different types of trends. And I like that style, Sean, because I like to also, I mean, we're younger, trying to find these stocks that have potential to grow 10x over the next, 10, 20 years is pretty attractive to me, compared to buying some of the big boys that probably, would be maybe lucky to double here at this point. But always great to catch up with you, Sean. Any final words you want to leave us with?
No, I mean, obviously, hopefully, we, everyone here has a good rest of the trading year. And if we don't speak before then, other than that, I think, again, my general view is we're seeing this transition, and I think rates coming down is a net catalyst for everything else. And find good companies and track them
Good
closely.
companies at reasonable valuations. Some
You
of
guys
these
make
good
it sound
companies
so
aren't at reasonable
easy.
valuations. He
You
just
guys
gave you
make
a
it
few.
sound so easy.
No, it's not. It's hard. It's actually the hardest part is just staying in it, even when it's getting
It
smacked
is.
sometimes.
That's where I stuck. I don't stay in them long enough. Yeah.
All right, Sean, well,
For
enjoy the
sure.
rest of your day. I'm sure we will catch up again before the end of the trading year, so we'll talk to you soon. Enjoy the rest of your Wednesday, and thanks again for coming on Benzinga's Pre-Market Prep.
Awesome, guys. Have a good one.
Thanks, Sean.
All right, guys, that was Sean Emory, of course, at Avery and Co. CIO. Always great to catch up with Sean. Some good long-term ideas there. Dennis, one other thing we missed, or
Sure.
I feel silly about it.
Okay.
When we were talking the other day about the NCAA football game and how big of a deal it would be, and we talked about, Sony, we talked about, EA. We didn't even mention GameStop, which I'm not saying this is why GameStop's moving, but GameStop perked back.
starting to perk up.
But GameStop started to perk up, and we did have on Tuesday yesterday. Adam Mesh was talking about GameStop, and that the chart looked good, and that he was selling puts on it. I don't know. I'm not saying, again, like, and whenever GameStop's moving, it's most likely just social media buzz. And
here's an issue, though. Me and Joel talked about this a lot of times. When the meme stocks start perking up, it's usually near the end of the short-term speculation where it starts to cool. So I start seeing the meme stocks, and you saw not just GameStop yesterday, but a lot of those high short interest stocks all blasting up 10, 12, 13%. Sometimes that's the period where, okay, we're getting a little bit overexcited here. So I look at the chart and I see, GameStop had a good day. It's off, though. It was almost $30 last night. It's leaked some of that back here today. I get more scared on the overall market when I see stocks like GameStop start to take off again. But, and I actually have a little bit of GameStop I put in the long-term portfolio just for participation purposes. It's like a smallest position that could be in my long-term portfolio, but I stuck a little bit in there because I keep thinking the Roaring Kitty's going to say something with AI, or you're going to see, I think there's going to be some pop eventually on some headline that, GameStop's trying to reinvent themselves. But I'm sitting there just for a headline. But I mean, it does scare me when I start seeing all these high short interest names start to pop up. It starts to scare me.
Yeah, I mean, and we've seen that in the past where, the more the meme stocks are going up, the more the overall market's going down. And to your point, it's just kind of like the end of the speculation cycles can be kind of a contrarian indicator there. But I think my point in bringing up GameStop, and again, in relation to the NCAA stuff, is that the GameStop community will take any slight news whatsoever and try to use that as a bullish catalyst. So if we start getting some data saying oh, foot traffic is higher in GameStop because people are going to buy new consoles, which was my thesis, is that people are going to start buying more, PS5s and the newest Xbox to play this game, that maybe they will try to start to latch onto that, because Roaring Kitty kind of taking a cat nap from social media, has been a little quiet since he
It
did his
has
whole
been quiet.
stream and he did his Chewy tweet.
Yeah, he's been quiet.
He's taking a cat nap there, so they're looking for other catalysts, and this NCAA one could be that catalyst. Real quick, Intel perking
What
up
happened?
even.
What just happened here? It was
I don't know.
34.40. We were talking about this at the beginning of the show. You can rewind the show, and I was saying that I said two, GFS and Intel. Then GFS was actually, I said, trading down a little bit at 54.30. Did they all of a sudden just catch on? Like, did they all of a sudden just start figuring it out that, hey, these two stocks are the ones that probably benefit if Trump is not going to be all rah, defend Taiwan? So big pops here, man. Those are good trades right there, even on this show. Intel at literally 40 minutes ago on this show, or 50 minutes on this show. And, we got a 3.5% pop here, 4.5% now in Intel. So I don't know why all of a sudden these stocks just blasted off, but Intel GFS just took off, and maybe people catching on to that. This is, these are all of a sudden Trump stocks.
Or we got a big boy that watches the show, and they got in it after we said it.
The big boy is like, yeah, Dennis likes it. We better just go in and buy our hell out of
$1 billion
Intel here right now.
Intel.
I wish it was that simple.
Yeah, someone in the chat was talking about UNH. UNH, what, closed up 6.5% yesterday? What was the news yesterday? Let's see.
The new earnings.
Oh, okay. So UNH.
And this is rotation too, folks. UNH. Look, you want to talk about laggards? Here's UNH. It's been sitting here for the better part of 2 years, going nowhere. So 2 years, 2.5 years. We were 2022. We were 500. Yesterday, we were basically 500. So 2.5 years ago, nowhere. The laggard trade is hot right now. The laggard trade is hot. Maybe it cools off instantly. Maybe it's cooling off today. A lot of these trade stocks, everything. This is one day where a lot of stocks are down here today, except Intel and GFS, the two we gave at the beginning of the show. There's a lot of stocks down here today, like not just tech stocks. I mean, you're seeing consumer staples pop up here, defensive, because there is like IWM is down now $2.50 here. So just quietly here, we're starting to leak across the board.
Yeah, I did want to mention Burke at some point hit new all-time highs yesterday, and we talk about a diversified portfolio. Hard to get more diversified than when you got Geico, Dairy Queen, Apple, all these different types of companies in that portfolio. And I think, honestly, like, to me, if I'm trying to get a little bit more defensive, I don't mind selling some of my big tech stocks and buying some Burke, because I still get to keep that little bit of exposure to big tech between Apple and some of its other holdings, while also getting, those energy stocks and some of those ones that probably are going to be a little bit more defensive. But, Dennis, we're stock pickers. We like to do it ourselves. We don't like to just go, buy.
That's it. Else's. Like people say, why don't you just invest in an index, not worry about it anymore? Well, that ain't any fun.
Yeah, we like to have fun with
a diversified portfolio and have some fun with it. Obviously, the trading side is completely different, but the investing side, I mean, if you're not in the markets every day, there's the argument just dollar cost average, just buy and don't worry about any of this stuff. But if you're a trader, there's opportunities to extract alpha everywhere. And you know what the best alpha extraction tool is? Headlines. Get your Benzinga Pro. There's an article for you and a pitch for you, because, knowing what the headlines are and getting on the headlines early. And again, just even example from this morning, Trump with his commentary. Well, it's hitting Taiwan, it's hitting NVIDIA. I'm like, well, isn't this good for Intel? Isn't this good for GFS? Well, all of a sudden it is. So there's a lag sometimes there, folks. I make most of my money trading headlines.
Yeah. Speaking of headlines, we haven't talked one from yesterday. That was Save Spirit Airlines, which, I mean, again, this is Benzinga Pro. You can just sort in there by the importance. So I'm going to a mid-level of importance on the headlines. It's going to filter out some of the headlines that aren't that important. Save yesterday gave some revenue guided or weak preliminary revenue numbers. I believe is how we want to say that. And then this morning, catching some downgrades. TD Cowen downgrades Spirit to sell, announces a $2 price target. Sorry, Dave Portnoy. Save going down a little bit.
Still in there? Is Portnoy still in
I
there?
don't know what he's in or out
Gosh.
of.
Yeah,
Davy
yeah.
Day Trader, but that was one he was in on that one. Not good news for the airlines companies. I believe United is set to report this afternoon. It's UAL trading down a little bit ahead of the report. Yeah, so those numbers come today. Of course, on Thursday we will have Netflix, which reports Thursday after the close. We'll do a bigger preview of Netflix tomorrow.
And Taiwan Semiconductor reporting on Thursday. That's going to be, so they're all going to talk about Netflix. You know what's going to affect the market the most is Taiwan Semiconductor earnings, TSM, especially after the Trump commentary, especially after ASML earnings.
Yeah, you had ASML earnings, you had Taiwan Semi, you did have AEHR, which is a smaller company in the chip sector, trading up 10% after reporting good earnings yesterday. And this one's perking up big time, trading from around $10 a share up to 17. So I know a lot of people in the chat watching this one. AEHR had to do the quick earnings report there, but that brings us to 9:01 a.m. Dennis, any final thoughts? Any predictions
Just
for the market
expect,
today?
and remember, we kind of set up not that great today because the IWM's had this historic run. So it's kind of short-term bubble-ishes, even though the stocks long-term are cheap, most of them in there. This was a big move, 10, 12% in 4 or 5 days. You could fall 3-4% on IWM and still be bulls still in complete control. So it just doesn't set up well to be a hero today. And maybe I'm wrong. Maybe this is the day you got to be coming in and buying stocks because overall market environment, the interest rates going lower, should be good and conducive for stocks. And maybe you should be thinking about. But what I'm thinking about here, I honestly today. Obviously, Intel looks like it's having a pretty good morning here, and I know people made fun of it with Bristol Myers, but Bristol Myers is defensive too, 5.83%. It's the kind of stock for today. It's the kind of stock that I wouldn't be surprised they buy today.
Yeah, it'll be interesting. We'll see if IWM, can perk up a little bit. Of course, that win streak in jeopardy today. And then, of course, you have those other names that we've mentioned throughout the show to watch today. Taiwan Semi, Intel. And it should be an exciting day, Dennis. I mean, I know a lot of people have been out there looking for some more volatility. Today could be that day where we get the volatility. I still don't think we've had a day where the S&P 500 has it's like the record for longest time without a 2% drawdown. So I'm not saying that's coming today, but there are a lot of people that have been calling for increased volatility in the markets. That will be a wrap for pre-market prep today. Tomorrow, it's just a day away. And we have, who do we have coming on with us tomorrow? We have Tom Hewlick, a guy who manages over $700 million. So that should be an exciting time here where he's putting his bucks in today's crazy market. So with that, everyone, thank you who tuned in to Pre-Market Prep. We'll see you guys tomorrow morning, 8 a.m. Of course, live trading will start right after this.